Welcome back to Smart Trader Talks. I'm Sarah, here with Mark from CMTrading. Today we're diving into a question that's essential for anyone interested in online trading. What is a CFD and why is it significant? I think it's one of those key concepts that can really change your trading journey.
Hey Sarah. Right, this sounds super interesting because I've heard about CFDs before but never really understood what they are, like in detail. So what's the scoop?
Great question. CFDs, or contracts for difference, are foundational to modern retail trading. They're like the Swiss Army knife of trading tools. You see, they let you trade on the price movement of an asset without actually owning it.
Whoa, wait a second. So you're telling me I can, trade gold, oil, or even Tesla stock without actually having to buy any of it? That sounds kinda magical. Almost like trading Pokemon cards but for grown-ups.
Exactly. It's kind of like catching all the Pokémons without having to keep them in your collection. With a CFD, you're entering into a contract with the broker to exchange the difference in price from when you open to when you close the trade. If you guess right, you make a profit. If not, well, you lose.
Okay, wait, so I'm just betting on the change in value like it's a carnival game or something? How does that even work in practice?
Great analogy. Let's say, for example, gold is priced at $1,900 an ounce and you think it's going to rise. You would open a buy CFD. Then, if gold later rises to $1,920 and you decide to close the trade, you're profiting from that $20 move without owning any of the gold itself. It's like seeing a funhouse mirror effect and betting on whether it'll be fun or frightful.
So it's all about predicting those shifts. Can I do this with other assets too? Like stocks? Or maybe even, what about pizza stocks?
Sure, that's the beauty of CFDs. You can trade stocks, indices, forex pairs, commodities, and even crypto, all from one platform. So feel free to dabble with your pizza stocks. But remember, your trades might feel like a slice of pie that can sometimes fall off the plate.
Got it. And what about short selling? Can I still sell something I don't own? That sounds a bit sketchy, doesn't it?
Not at all. CFDs make short selling easy. Since you don't own the asset, you can open a sell position and profit if the price falls. Think of it as betting on a friend's soup recipe. You're wagering that it's going to flop?
Haha, that's such a wild way to put it. But, is this all powerful or, scary too? Because it seems like there's a lot of money involved, right?
Absolutely, it can be both powerful and risky. The same flexibility that creates awesome opportunities can also lead to losses, especially when you start using leverage. It's like riding a roller coaster. Thrilling, but you've got to know when to, hold on tight.
So it's not just gambling? You're saying it's about making educated moves?
Exactly. CFDs are tools that work best in trained hands. If you use stop losses and have proper risk management in place, they can be incredibly effective.
So just to wrap my head around this, a CFD lets me trade on price changes without owning the underlying asset, and I can do that whether I'm buying or selling? Wow, that's super clear now.
Perfect summary. You've nailed it.
Thanks, Mark. This has been such an eye-opener. I can't wait for the next episode when we dive into currency pairs and decode those three-letter codes. It's like unlocking a completely new level in a video game, right?
Totally. Until then, keep learning and trade smart.
Laughs? Absolutely. Catch you next time.